said, my name is Fred Ruoro, and I'm the Managing Director of CIC General. I'm very excited to be amongst friends. On every table, I look, I see my friends, and I hope after this, we are going to have a chance to catch up and talk. But we are here today to talk about risk management. And before I do that, I will briefly talk about CIC. CIC Group is your company, and I have been sent greetings by the Group Managing Director, Mr. Patrick Nyara. He is very busy. He has board meetings in Nairobi, and he said I'm able and capable to represent him here. But he said thank you very much for the support that you continue to receive from the KETSA fraternity. So I just update you on where we are from a CIC perspective. A few changes. We have got a few good things that we'd like to introduce you. We have our group company up there, and we have the subsidiaries. Starting from the far right, there is the general business, where I'm the managing director. Please accept greetings from the managing director of our life business, Mr. Meshach Miogo, who also said thank you very much for the support that you've been giving him and for your grace and hospitality. We have our asset management business. We have our Uganda business. We have got our Malawi and South Sudan business. However, ladies and gentlemen, you can see we have got a blue, something blue there, and that green, and that is CIC Pharmacy. So we have a new subsidiary called CIC Pharmacy. And the reason why we decided to get into the healthcare business is already we have got a very huge portfolio of healthcare in terms of insurance customers. This year, as at end of October, we had 9 billion worth of Kenya shillings in premium and medical. And out of that 9 billion, 7 billion we pay to hospitals. And out of that 7 billion, more than 50% goes to the pharmacy. And we don't understand that space. So this is a step we are taking. We have opened our first pharmacy. I'll talk to you about it. And the idea is that we should be able to give our customers affordable drugs, quality drugs, and also get into the healthcare space. We also have our micro business, which is also a new company, which again, we are trying to see what can we do for our members in the cooperative movement. Not for the employee, but for the members. A lot of you have bought CopCare, our retail product for members, where you pay 300 shillings per year. Every table I'm seeing people who have bought for their members up to 80 years, and again that falls under CopCare. Our mission has not changed. We are here to help people achieve financial freedom, and our values is integrity, dynamism, and cooperation. In the market, in the group, we are number 2, and there are those who are ahead of us, 1 person. There are those who are behind us, many, and this is because of the support that you are giving us. And for that, I would like to say thank you. Just a brief highlight about our life business. The loan card, which Meshach is always in your office looking for it. Our general business, some of our products, our online platform, and that is our pharmacy in Nairobi. Next year, 2026, we are planning to open an additional 7 branches. So you'll start seeing more, but we already have one and it is working. And just for context purposes, you might ask, how much are you selling the drugs at? And I've been able to put the comparison here. So when you look at some of the drugs, for example, areas which is antihistamine, you can see most people are selling it for 4,000 Kenya shillings. At CIC Pharmacy, we are selling it for 2,300. When you come to augmentin, just hold on. When you come to augmentin, which is a very common antibiotic, everybody is selling it at 800. that 836, you can see where CIC pharmacy is, 2,000. And more importantly to note, that price of 2,000 is not charity. We are also making profit out of it. It is just an indication how these people have been taking advantage of us. When you come to Zinat, another very common, and you all know Zinat, don't you? You can see 2,200, 1,900, and that's where we are. We have got glucophage for diabetics, 700, 700, 460. So essentially, we have discovered that people have taken healthcare to their business and they want to make money at any cost. But you have taken this initiative to protect you. Ladies and gentlemen, that's it about CIC. I thought it was important that we share with you what we have been doing, and because CIC is your company, it is important that you appreciate what you have been doing. The agenda, the theme for today is leadership and governance structure that strengthen risk management. Leadership and governance structures that strengthen risk management. And when we look, right now when we are talking, very many Kenyan companies have collapsed. We all know them. Even in the cooperative movement, we have seen many cooperatives which are either struggling or they have collapsed. But it is not yet official, but we know who is struggling and who has essentially collapsed on paper, but we are waiting to hear. And when you look at one underlying theme, the one underlying theme is poor risk management. People have got a very high risk appetite. I remember we used to have a very good company in Kenya called Uchumi. Everybody, including myself, I used to go to Uchumi and do shopping and leave carrying bags. Uchumi did not collapse because it was not profitable. It did not collapse because it had no customers. I was one of them. It collapsed because the management had a very high risk appetite. They were going to Uganda starting branches instead of consolidating. Again, we had NACMAT. Those are companies we can talk about. There are others who we can't talk about here. Again, poor controls, poor risk management. So cooperatives, if your cooperative is going to struggle, it's going to struggle because of risk management. Probably, on a probability perspective. It is not because of members, it is not because of you're not collecting enough, it is because you are not managing risk properly. So this is a very apt topic that we need to discuss and get to appreciate what is it that you can do to enhance risk management. And on the other side, from where I sit in CIC, I'm always insuring cooperatives. And when something, a loss happens, I always see a risk. There's a risk that should have been mitigated that didn't happen. Of course, sometimes a loss has to happen. But a lot of the risks, the failures, the losses I see, they are occasioned by inadequate risk management. So, fellow leaders, this is a very important topic, and it's an apt agenda to discuss in today's environment. So, when you look at the cooperative, the positioning of the cooperative, it's a lot of money. When you look at the SACCO report, the assets have hit 1 trillion. A lot of money is involved. Of course, there is a concentration risk because I think around 6% of cooperatives hold about 70% of. So there are very few who are very strong and a few others who don't have as much assets. But the impact is there because we are touching 14 million lives. And I was talking to the CEOs the other day in Naivasha. I was saying that 14 million lives, they are not the majority of Kenyans because there are people in their 30, 40. There's a very huge group of youth below 20 years who are not being touched by cooperatives. And you need to start thinking about that. Otherwise, you are going to have what we call a strategic risk, where your products are no longer relevant to the people in the market. So, when you look at the cooperative environment, SACCO has issued a guideline on risk management. Central Bank has issued a guideline on risk management. SACCO is on your case. Is SACCO on your case or not? They are on your case, isn't it? And it is going to get worse. The same thing for regulator in the insurance industry. Of late, I'm receiving more letters than I used to receive from the regulator. Fred, do this. Fred, we must approve your board members. Fred, we must approve the management. And the regulator sometimes refuses. So the regulation environment is going to get worse. It's going to get more demanding. The issue of cyber. Today in the newspaper, there was an article about some people stealing identity. They come, they borrow money, and so on. And I know you've been affected by cyber losses, operational risk, your staff stealing money. It's also a very common thing nowadays. I'm seeing a lot of cases of people who have lost money, cooperatives. You trusted somebody who was sent to you, you need to do background checks, and then you bring a claim, then you start talking and telling us, hey, you know, they are the one family cooperative, please pay this claim, we have learned our lesson, and so on and so forth. Number 3, the issue of trust. Nowadays, people don't trust easily. Unlike previously, everybody is feeling that somebody is taking advantage of their trust. They want protection, they want to be assured, and the only way you can assure your members that you are doing the right thing is by demonstrating you have got good risk management. The climate, the fintechs, as a cooperative, there's a big exposure because if somebody is not borrowing from you and is not borrowing from the bank, they go to those fintechs. They call themselves fintech, but some of them are essentially shareholders. And I wonder who borrow money from there, but I have a few people, even in the family, where they get cornered and you have to pay the loan for them. I'm sure it has happened to the majority of us. And social disruptions, things like Gen Z. The point is, the environment will only respond to effective risk management. If you take shortcuts, people will take advantage. If you take shortcuts, your data will leak. If you take shortcuts, regulator will be on your case and they will tell you what to do. They start managing you as opposed to having you manage the risk. And when we look what SACCO says, the question is who is responsible for risk management in your cooperative? And SACCO is very clear because it says the board members, people who are seated here. Whether you are doing it or not, you are responsible. And if you are responsible, you shall be held to account. The biggest risk we see with board members, if you have got a very personality of the managing director is very powerful, or the management. Sometimes you get uncomfortable asking questions. But whether you are comfortable or you are not, you are the one responsible. And SACCO says, what should you do? You should, number 1, as a board member or as a leader, you should approve the risk policies. If you have sat in a meeting, you have not seen an approved risk policy, then you are failing. You should take notes and say, tell the manager, what's up? What is our risk policy? Have we approved it? What is our appetite and what is our tolerance? Then there should be a board risk committee. Ideally, in some places you combine audit and risk. You should have regular reports. At CFE, we do quarterly. We go to the board on a quarterly basis and we tell them, this is what we are doing about the risks. This is our appetite. Have we had any breach in our appetite? And we talk about what is our appetite for reputation risk. And we say our reputational risk appetite is 0. What is our appetite for credit risk? This is somebody coming to buy insurance and they borrow. They tell us we'll pay you next week. We have got a balanced risk appetite for that. What is our appetite for compliance? Kuvutana na regulator, it is 0. So as a board member, you have a right, and the management is obliged to have those conversations with you and ensure you have got independent assurance. As a board member, again, you must ensure there is an independent assurance. Sio rafiki yako, sio rafiki ya management, independence. To come and say, are the controls working? Have the risks been assessed? And at CIC, we have retained PwC who do this kind of work. So, just to get the assurance that there is no conflict of interest, the people who are implementing risk management, the management, are the ones who are also reporting. Even the internal audit team reports to the board, they don't report to management. Why this topic matters is the issue of trust. People have become increasingly less trustworthy. There is weak governance, governance around getting business. I've seen some people growing very fast, and you know them. Actually, the biggest risk we see in the market is people trying to grow cooperatives. They want to get all the members, regardless of the quality. Insurance companies, they get incompetent managers who want to drive growth, and they say we want to get growth at all costs. We want to be number one at all costs. We want to be this at all costs. And they say the end justifies the means. The reality is the end has never justified the means. There is also the how. How are you going to achieve that end? Because you can be rich, you can have a lot of money, but it has to be money you have worked for. If you steal, that wealth is not justified, isn't it? The leadership and risk management to protect the purpose, of the cooperative, because sometimes purpose gets hijacked. You have people who can speak very well, or on a living, they know how to communicate, but they are diverting you from the purpose. And I think it is important that we talk about the purpose, because when you talk about cooperatives and vis-a-vis a commercial enterprise, risk management for a commercial enterprise, we are trying to protect the capital, we are trying to protect the business and so on. But for cooperatives, besides protecting the assets, you also have to protect the trust that members have with you. If you don't have trust, people come together because they trust. The moment that trust goes away, so anything that endangers that trust, it is a risk that you need to manage. So these are our oversights, the conversations we need to talk about, the issues of oversight, the issue of culture, because a lot of people, they think risk management, their papers, they are forced to fill, boxes to tick, but risk management is also a culture, and empowerment, and in terms of the way forward. So before we get into the meat of our conversation, it is important we talk about the key vocabulary. These are vocabularies. If you don't have this vocabulary, then your conversation about this cannot reach. And of course, the issue of risk definition, you did a very good job. You gave 3 or 4 definitions, and risky, sometimes they do mathematics. But for us here, if something can go wrong, then there is a risk. If you lend somebody and they can't pay, there is a risk, and that risk must be addressed. There is a question of risk appetite. What is your appetite? That appetite must be approved by the board. If you are driving home in the evening and you are just going home to rest, you drive slowly, you have no appetite to. But if you are late for a meeting, your appetite for speed is a bit higher, because you want to do things faster and faster and faster and faster. So, as a cooperative, you need to decide, as a leadership team, what is going to be your appetite. As you try to achieve your objective, as you try to go home, how quickly, how fast are you going to drive to get there? Because if you don't define your manager in Mombasa, your manager in Nanyuki, SASRA says, as a board, you must approve the appetite. And I just finished my meeting, my board meetings last week, and I submitted my revised risk appetite, where I say to the board, we want to reduce our appetite in this dimension because the environment is changing. We want to increase our appetite in this dimension. We want to have a PESA and so on and so forth. The issue of risk tolerance. Tolerance is a question of how much can you tolerate. You know, sometimes I cannot tolerate this. You know, I was tolerating, but eventually, nimechora hiyo line. See, ukipita hapa now, this is our appetite, but you cannot pass here. 5% margin of error, essentially the risk tolerance, which again must be approved by the board. There's the risk capacity, risk universe, and the culture. And the most important thing to do here is to talk about the culture. As I was preparing for this presentation, a lot of content, the culture of people keeping quiet. You know, you are a manager, you are a board member, people who are on the ground, they have got no way of talking. Information seeks is isolated, and anybody who has the true information doesn't have a voice. You saw the aeroplane which fell from Boeing here in Kenya and also in, I think in Malaysia or somewhere. People knew that this plane is not safe, but the decision makers didn't know. And even if they did, there were not enough structures to take advantage. It's a question of culture. So even if you talk to the cooperative who are struggling, because I believe you know some of them, you realize there was a culture. If you talk to NACMAT, they will tell you there was a culture. So risk management is a question of culture, and it is important we have a culture where people can speak openly. They say, Fred, is anything that is not doing well, so on and so forth. So, as I was preparing for this presentation, I realized the scale at which KETSA members operate at is comparable or bigger than some banks. So when you look at the risk profiles, the definition of risk, I also try to see what does CBK say, not just SACCO, because eventually there will be a merger around that space because the business you are doing is also a business of lending. So there's a question of strategic risk, where we are all dealing with teachers, and there are very young teachers who are coming in. They know they can get money from fintech. You need to have a solution for them. Is credit risk. This one is very familiar to you. I believe you know better than I do. Operational risk. I've seen data loss, your staff stealing, liquidity gaps, compliance, and reputation. And some of these risks are combined. If you have got data loss, it affects your reputation. It affects your compliance. Some of these risks can be insured. This needs to do with data loss. We are able to insure them, and we have insured very many of you here. But insurance should come to take of the residual risk. You need to have your own internal governance to make sure that these risks do not materialize. And the elements of sound risk management, the board members must be actively involved. I forgot to underline the word active. I should have put it in bold. Because board members, you are here, you are a board member, this is not your core job, you are busy. Please make a point to be actively involved in overseeing the risk management. And you remember what I said when we started? SASRA says what is expected of you. Did you approve the risk management? Are you getting reports? Are you getting independent reviews and so on? Adequate policies. effective monitoring, and strong internal controls that have been independently verified. Have controls, but also have them independently verified. Again, the vocabulary, we've spoken about this, and you are the first line of defense. Wale watu wanaambiwa as a leader, mwenye uko mbele, mtusaidie kupigana na hii maneno. Because you set the tone. Leaders set the tone. Even in a family setting, as a father, I have 4 children. I set the tone of what happened. I rarely have to say much. But people know what is acceptable to the father and what is not acceptable. So you set the tone, you define the appetite, and you say, no, we cannot let 30% of our assets to one person. We cannot. Leadership, they build trust through communication and encourage proactive dialogue. So as a leader, you need to have foresight. As I'm telling you, a lot of you have been hit by cyber. Na wahenga walisema, ukiona mwenzako amenyolewa, unaweza kufanya nini? Unaanza kutia maji. There is a gentleman we met in Naivasha who said the difference, there are 2 types of people. People who have been hacked and they know it. And those who have been hacked and they don't know it. So you should anticipate these things. You should not be surprised tomorrow to hear that you've been hacked. That's all you need to know now that you know. And you should take measures to prevent. Some of these things are preventable. You can encrypt data on site, you can encrypt data, you can do multi-factor authentication. You can make it difficult for somebody to hack you. Staff are stealing from properties. We are Kenyans and we trust. In Kenya we work with an element of trust. But you have to protect yourself because hakuna mtu anakujenga ameandikwa hapa uso, mimi ni mwizi. Sindio? So you have to take control to ensure people are not stealing from you. And what do? You know, you put where you have got segregation of duties. You know, there are many things that you can do, and I believe you know more about them than I do. But no, it is happening to other people. I can tell you from where I sit, I'm always seeing claims they are coming. The issue of integrity, the issue of accountability, and learning continuously. So board oversight, again, allow me to repeat this, that as a board member, you owe nobody an apology for bringing up the conversation about risk. And I really hope that makes you feel empowered. Talk to your managing director and ask them about the risk appetite. And you ask them, we have got strategic risk. What is our appetite for strategic risk? For strategic risk, you can't have zero appetite, otherwise you close shop. Compliance risk, that has to be zero because you don't want to be called SACCO or taken to court. Reputation risk. Do you want to take chances with your reputation? Yes. And then you think about what things can affect your reputation. And then you start having ways of mitigating them and promoting governance and ethics. So leaders set the tone, you set governance, and you monitor. There are 5 stages in managing risk. Number 1 is identifying the risk. And then you assess. You identify the risk that people can default. You identify the risk of people stealing data. You identify the risk of non-compliance. Then you assess the risk. And then you treat the risk. You treat the risk either by avoiding it, where you say, I've got no appetite for this risk. You transfer. You share the risk through contract. If it is a risk about system, the system vendor, they need to bear a bit of risk, isn't it? They need to have insurance in case their system doesn't work and members don't access their money. You can transfer the risk to the members. And finally, you monitor. You keep an eye on that risk on a regular basis. So on governance, just establishing the right audit committees, empowering people. I've seen a trend where companies now are having an ICT committee as a board committee. I know now about 4 companies, because IT has become very critical and it is being shadowed by audit and risk, finance and investment, HR and governance. Now we have an ICT committee where you look at all these things of cyber generally. So from an audit perspective, the issue of independence of the auditors and the people who assess your system is very critical. A lot of times we are Kenyans again, and I think it is a risk that in Kenyans we want to be close, we want to support your people. But try to get auditors who are not your friends. Try to get auditors who have something to lose. Segregation of duty reporting and ethical compliance. Are you biting more than you can chew and swallow? Na ile red line, ile nilisema, you know, when we were boys and we used to find out who is strong, and we used to draw a line on the sand and say, this is my tolerance. So if you cross this line, then means we progress in the other direction. There are scenarios testing. Scenario testing is where you say, like I've seen banks reducing the interest rates. How far can they reduce before they start losing money? And how are you going to mitigate? What will happen if somebody in a Mombasa branch is stealing? Early warning indicators, you don't wait for things to happen. You need to have a conversation about what will tell you what is happening. What is an indicator that people could be stealing? What is an indicator that there is a problem at a particular branch? Sometimes a lot of this theft doesn't happen in HQ. It happens very far, and you need early warning indicators, crisis communication protocol. You all remember what was happening during the COVID time. Every day, the fears for health. And I used to listen to him for some reason. Every day I was sitting to hear what had happened, but I was more keen about opening the borders. I wanted to see what they have opened. But they handled it very well, isn't it? The same thing, you should have an idea. If there is a crisis, you can't afford not to communicate. You need to have a crisis communication protocol to handle that. So I spoke about culture. Culture is how we do things, is how we talk. The leaders should model the behavior. Leadership is about behavior. There are people who can influence you without talking to you, and it would be great if the cooperative leaders demonstrate ethical behavior, demonstrate a risk management mindset, and so on. So the challenges we are going to face, the people who are in agri area, climate. 2 years ago we had a flood. Last week part 1 there was flooding in Naivasha. Next year in April, every 2 or 3 years there is always flooding. And I'm saying that because we pay those claims. Last year we paid claims for 300 million simply because of flooding. Then before that kunakuwa na jangwa, chakula inakaukia kwa shamba. It is a risk you need to think about. Cyber risk. This cyber risk, please take it as homework. It is happening and you are affected. And the problem is, from an insurance side, most people don't know that they have been affected. They know 6 months down the line. Even when the insurance policy they have cannot help them, because the policy says you must know within 30 days and inform us in 60 days. So if you know 9 months down the line, that's when you come try to take organic attend. And then nimekupatia loan card, nimekupatia magari, nimekupatia nyumba, and we are one. You know, you are also your shareholders. So please pay this one. Fintech, a big risk. The issue of ethical lapses, people stealing, and socio-economic shocks. You can see the way the interest rate is going. In 2 years' time, we have an election. We trust it is going to be Well, we pray for that. And my call to the board is to make risk management an agenda. Make it an agenda in your board. Now ask your manager about your risk appetite. Talk about your risk tolerance. Talk about your risk capacity. Talk about cybercrime. Talk about strategic risk. Talk about youth. How are you addressing the issue of the youth? Because people who are below 25 years, they are like 80% of this population. So all of us, in 10 years, some of us will have retired, and others will be on our way out. We need to start thinking, how do we serve those people? We need to empower the board members. You can't have a CEO who is too powerful to answer questions. If he is, that is a risk that needs to be dealt with. You know, there are people who are so powerful, or the way they articulate issues. Hata ukijaribu kumuuliza swali unasikia kabaridi, kuna baridi unasikia huko ndani. That should not happen, because we have a job to do and read with foresight and empathy. As I come to close, there is a clause in the book of Proverbs, chapter 22, verse 3. It says, a prudent man foresees difficulties ahead and prepares for them. But a simpleton, an also prudent man, goes blindly and suffers the consequence. I've told you about cyber, I've told you about the environment. The prerogative is on you. Are you going to prepare for them, or are you going to suffer the consequences? Ladies and gentlemen, thank you very much. May God bless you.